Hello, welcome to Between the Hedges. I'll be your host for today. My name is Tyler Boley, and I work for Earnings Beats. And with us, we also got Matt Townsend, and we got John Hopkins. Matt, how about you go ahead and introduce yourself real quick?
Yeah, guys, how you doing? My name is Matt Townsend. I'm originally from Charlotte, North Carolina. I'm 29 years old. I graduated from UNCC and with a finance degree. I have a huge passion for playing any kind of game, watch golf, anything like that. It's actually a big reason why I know Tom. And then I work for Earnings Beats, and I'll do a lot of the earnings-based research for us and customer support. So, John, how about yourself? How did you meet John? Or sorry, meet Tom?
How did I met Tom? I met
Yes.
Tom, well, this is going back quite a ways. I had another company back in the 1980s. And after I formed the company, I realized that I needed somebody to take care of my accounting. So I saw there was an accounting firm in the building. It was called Stoy Malone. And I walked in there and signed up with an accountant. And it turns out that Tom Boley was one of the partners, the CPA. Even though he wasn't my direct accountant, we got to know each other, really well. And 1997, that first company I started, I sold it. And so I sold it and had a little bit of time on my hands. And Tom and I were always talking about the market, always interested in the market going back, 30, 35 years together. And it turns out that in 2004, we had this idea that we're going to start a company. And the whole purpose and idea behind the company was to provide technical analysis and market-oriented educational information to our members. So we had this idea that we wanted to start a company. So we started this company. It was originally called Invest Ed Central. We wanted it to be Invest Central because it was an easier way to find us, but that was taken. So we did Invest Ed for the education and then Central. And we started out with a one-page newsletter. So we had one page where we talked about the market. I think we started out with, 5 or 6 members. Have no idea why they decided to take a leap of faith with us, because we hadn't really, proven anything at that point in time. But anyways, we started the company. I was pretty much, running the administrative side, and Tom was the technical analysis guy, because he had studied a lot. And of course, I'll talk about that more in terms of his, what he brings to the company right now. One of the ways we decided to try to drum up business and get some new members was to go on the radio. So we found a local radio station looking for some content, and we went on together in the Washington, D.C. area. And then after a little bit of time, a few people heard about us, and we ended up on a nationally syndicated show in about 20, 25 different cities around the USA. So people
At that time, my daddy had the recording studio in the basement, which was really cool. I don't know if you had that at your house, but he just had like the whole setup with like the microphone and like the radio transmitter. And like back in the day, like that was pretty cool to see at your house. I mean, I was pretty young when that happened, but sorry, go on.
You're trying to figure out what's this guy doing here.
Yeah, exactly.
Yeah, so we started, we started getting some recognition. And it was a call-in show. People could call in with questions, and we would get people to call in. We take their stock questions. And then we started doing webinars. No, I take that back. We started doing not webinars, seminars. There was no webinar then. It was a seminar. We would literally get a hotel room, invite people. They'd come. We'd put the projector up on the screen, and we would bring our charts up and teach them. And it was quite an undertaking just to get people to show up. I think our very, very first event, we got a hotel room, got all kinds of food, beverages, the whole thing. I think 3 people showed up. So, it was a little discouraging, but we learned from it, and we started doing some other things. Now, right about that time, stock charts came into the picture. So stock charts, based in Seattle, Chip Anderson's company, So we connected with them somehow and talked about them doing some advertising on the show. And at the same time, Tom started writing for them, doing blog articles, and that evolved over time. So we had all this going on, and we're really, getting pretty established as a business. And of course, Tom and I had gone through the .com bust, the Great Recession. Of course, we went through the whole COVID thing together. So we've been through pretty much, any kind of market. And trust me when I tell you, when you're starting a business, especially in the market, you go through these things, it takes a lot of tenacity to keep things going. So we weathered all of this stuff together. And then there came a point in time when we decided that we wanted to change the focus of the business and change the name from Invested Center to Earnings Beats. And the whole idea behind the concept was to focus on companies who provided earnings and beat both top and bottom line expectations. That was the basis of us saying, a lot of people are probably going to be attracted to strong companies. So we started Earnings Beats, started with a single chart list, our strong earnings chart list. And then from there, it started to build, the business started to build. Now, at one point after we had done this, Tom got an invitation to actually go to work for Stock Charts. So we had to sit back and say, okay, what are the pros and cons of this? Well, the cons is he wouldn't be at Earnings Beats, full time, and I wasn't looking forward to that. But the pro was he was going to get a lot of exposure. He had great knowledge, and we said, yeah, let's do it. So Tom worked there for 5 years. And, he was an analyst and he wrote a lot for them, a tremendous addition, to the staff. And they had a number of other guys who were working with him as well. Well, at one point, they decided to do some shifting at Stock Charts. So Tom then came back to Earnings Beats, which was, you can imagine, I was very happy for him to come back, especially with his following, because he had gotten such a following. He had, his reputation was there. At that point, he had done some tremendous work at Stock Charts, and he came back, and that really was kind of what I would call the rebirth of the company. So we were sort of just plugging along while he was gone, maintaining. But once he came back on the scene, that's when things really took off, because a lot of people knew him, they trusted him. Anybody who gets to know Tom Boley, knows he's just a straight shooter of a guy, right? Our chief market strategy, he's the backbone of the company. Tom is the backbone of Earnings Beats. And he has a level of knowledge that just goes back many years. He's an historian, when it comes to the market. He's just so passionate about what he does. So that's kind of the background of how we got to where we're at today. Now, I want, the staff, I want to talk about staff just real quickly. So after, Tom and I founded the company, my son, Chris Hopkins, actually started working for us part-time right out of the chute. So he's been, part of the company going back to 2004. And Chris is pretty much, he handles all the IT. He's very involved now. We've got a lot of effort going on in trying to, to build a business through the internet marketing. He's very involved in that. He brought a firm on to work with us so we could, get that done. So that's Chris. And then back in 2019 or no, let's see. I've got it here actually. 2019, Erin Weber, Tom's daughter. She's a CPA as well. You got these CPAs. I'm surrounded by these CPAs. So she came to work for us. And I'll tell you something, I was so happy to have her on board because she's just phenomenal at what she does. And she came in, started really working with me in customer service. And then she pretty much took that over. And then she got involved in, being in part of our webinars. She's done so much marketing and graphic design work for us. That's pretty much, and administrative work. So she really covers a lot of territory. Then Matt, you joined us in 2020, right? And you got to know Tom because you're a golfer. He's a golfer. You met him at the club, I think.
I actually joked that we both got dumped that summer, and we played a lot of golf together.
Well, I'm sorry to hear about our game. Anyway, as Matt said, he's very involved in working with Tom. He's also really become a top-notch customer communicator. On a regular basis, Matt is talking to customers. There's a lot of intricate questions that come in. And Matt is very involved in that. He also does a lot of research, statistical stuff with Tom. And then just last year, Tyler joined us. And Tyler is also very involved with Tom on the research, analysis, getting involved, and he's getting involved in more and more. And I'm very pleased that I'm very happy that both you guys, are really going to try something a little bit different for us. These podcasts, we're trying to reach out to a wide audience. We have a varied membership, but we want people of all ages, young, old, in the middle, to really understand what we're all about.
Yeah.
Right.
Yeah. And speaking about like trying to differentiate, like how would you differentiate like your service between Invested Central and Earnings Beats? Like, did you offer something different with Invested Central and then try something different with Earnings Beats afterwards? Or
Yes.
Is it okay?
Yeah, definitely. Invested Central was more, again, we were doing these seminars and we were strictly, we were doing technical analysis seminars, but we didn't have the tools that we have now.
Mm-hmm.
It's kind of funny when you think about it. Webinars, the way we do it now, set up so much better for the way we educate than throwing stuff up on the screen in the hotel and everybody's got their computers and they're trying to follow us along, with the screen. So yeah, I would say, matter of fact, if you want to pull up, why don't you go ahead and pull up the homepage?
Okay. Yeah,
I'll go over a couple of quick things and I'll wrap it up.
All righty. Let's see. Here we go.
Okay. So basically, the couple of things I want to cover real quickly that probably, get the most attention. One is our daily market report. Maybe you can pull up a quick, sample of and again, it's too extensive to get into it now, but basically Tom does a daily market report where he covers the broad market. He covers sector, industry, and focus. He gives ideas, trading ideas to people. And it's really kind of a macro look at and strategies, chart list strategy, like a macro piece that he does every day that has a lot of technical analysis and trading ideas that go along with that. Now, maybe you just quickly go into the chart list section because I had mentioned, if you go to the strong earnings chart list. So this really, I think, is something that, really sort of got us on the map with earnings beats, is that through stock charts information in their system and Tom's background, he created, this list, which basically, like I said, you can't get on the list unless you beat top and bottom line expectations. And we just kept adding lists over the years that are very relevant to people who trade. So that's really one of our hallmarks, is that strong earnings chart list. And then if you go to the portfolio section, we have 3 portfolios. Every quarter, we provide our members with 10 stocks that make up 3 different portfolios. One's an aggressive, one's a model, and one's an income portfolio. And this is for people who maybe don't like to trade as often, but they're looking, maybe to do something on a quarterly basis. That's been a very popular part of our service. And, since we started it, certainly our model portfolio has just crushed the S&P. Okay. And then the last thing I'll talk about, maybe go to the webinars. I want you to look at our webinar archive. These are archived webinars from just about every topic you can think of. We probably do 4 or 5 of these on a monthly basis. As a matter of fact, we got a big event coming up, right? April 15th. where we're really going to get into what's going on in the market. Can this bull market hold that we've had lately? Is it a bull? Is it a bear? What do you think? And all I can tell you is you want to be part of this, because Tom has been just ridiculously great at his forecasting. So,
yeah.
Right?
Yeah, not to call out the YouTube
Right.
audience or anything, but we get a lot of people who are always making fun of Tom's bottom calls. But everyone forgets back in January 2022 who was calling the top and who was, signaling for a lot of caution. So everyone just should keep that in mind. Just saying.
Absolutely.
And it's not even like the bottom call was that off. It was like 5 days below the bottom call. So I mean, come on, guys.
I got to tell you something. This is going way back now, but back in 2009, literally in March of 2009, the day the market bottom was pretty much when Tom called the bottom of the market during the Great Recession. And I know a lot of people were, if people listened to us, their portfolios would have probably quadrupled over the next number of years. Anyways, that's kind of that's sort of a summary. I'll tell you, our growth has been phenomenal. We have many thousands of members, subscribers. We have people, who get our full membership. We have people who get our Earnings Beats Digest. I think Matt's going to talk about that, just a little bit when he talks. And, this is what we're all of us are very passionate about the market. I come from a big customer service background. It's just, to me, that's what it's all about. You have to take care of your customers first. So we listen to them. We try to react, as quickly as possible, and we get a lot of great feedback from people. That's sort of our backbone. As far as who would be a good candidate for our service, certainly traders, who like trade on a regular basis, investors who are looking for just market guidance. So many people I know, if they've got substantial portfolios, they don't know who to listen to. The great thing about us is we don't have any connection to Wall Street. We don't have any connection to financial service company. We're independent. So everything we do and all we're about is really focusing on our members and their good outcomes. That's pretty much what the business is about. Anyways, that's sort of what, I wanted to go over today. I know you, Tyler, are going to go over some things, and then Matt's going to jump into somewhat what he's wants to get into. So unless you got any questions, I'm ready to just turn it over to you.
Yeah, not many questions. You covered the history of Earnings Beats pretty well, and it was great to receive some of that information. I'm sure a lot of our members are gonna love hearing that and just knowing about the history before maybe some of them joined us. But yeah, speaking about bulls versus bears, I was going to hop into some seasonality information for us about the month of April that might answer some questions, albeit not all the questions, but it seems to point in a pretty specific way when we look at the seasonality information of April. So let me just share my screen here. All right. So when we're looking at the seasonality information of the S&P 500, we could see that, the S&P 500 goes up, 79% of the time over 20 years in the month of April. And the returns that you're getting in the month of April is 2.1% on average. That is the second most out of any month, over the last 20 years. So that's something that you really should pay attention to. That this isn't make believe or make up numbers. I mean, this is pure statistics, and you can come in here on stock charts and look it up yourself. But with that being said, the three stocks that I wanted to look at, with it being the month of April and it being opening day, the day that we're recording this, it's March 30th today. I'm going to hop into actually three sports gambling stocks that do pretty well in the month of April. And, by the way, this is all information that if you're an Earnings Beats annual member, you can access this at any time. You don't have to listen to this podcast. And there are so many more candidates besides these three that I'll be speaking about. I mean, this is just three that perform well out of, 20 that we're going to showcase later on when we do the seasonality report for Earnings Beats. And it's, we have an Excel spreadsheet with over 2,000 stocks. So you can come in here and just look it up yourself if you don't even want to wait for us to come out with this information. So that's definitely something to think about. But the first stock that I wanted to go over was BetMGM. And we can see that over the last 20 years, it goes up 53% of the time in April. So it's not a sure winner, but it kind of, fits the shoe because we're going with a gambling stock here. So, it goes up on average over the last 20 years, it goes up 17.5%. So when it does go up, you're going to have a clear winner here. And the chart is pretty interesting too. I mean, right here, we kind of see a positive divergence. It kind of peaked down low right about here, and now we're starting to see the PPO turn up a little bit. And MGM on a relative basis, I mean, it's not doing the greatest, but at the same time, like compared or on a relative to the industry group, it's not doing the greatest. But compared to like the S&P 500, it's actually doing pretty well. And I think it has even more room to grow considering there are other gambling stocks out there that, are doing even better than it. And then, down there, just the relative strength to the gambling group. I mean, it was doing really well when March started, and now it's still trying to trend up a little bit. But yeah, relative strength looks really good. We just kind of need some volume. And I think, if we see a breakout above this little area up here, I think we could really see a strong breakout, and maybe some buying opportunity, along this trend line right here. It seems that a lot of stock or a lot of candles like to close around this this price right here. So I don't know. It's going to be interesting to see on the short term what happens with MGM Resorts. What do you guys think? Any comments?
I had to get my mic on.
Nice.
Sorry about that.
I think with a PPO reset.
What's that? Go ahead.
Go ahead, John. Go ahead, John, if you're ready.
No, I just think that, yes, I think that, well, a couple of things, the seasonality is something that I don't know who else does that. Let's start with that. Right? Tom, you guys go back, you get a tremendous amount of information. This is how you come up with this. A lot of the information and the conclusions that we come up with. But I think, yes, this particular, when you look at this stock, when you think about, how many, there's still a lot of companies that are, close to 52-week lows. So I think anytime you can see a stock that's got, strength behind it like this, it's worth certainly considering. And then when you add on top of the seasonality, all the better.
Yep. What do you think, Matt?
Personally, I like the PPO reset, and if gambling's starting to break out on its own, it's the rising tide lifts all boats. So MGM, if it's not the main performer, it'll go up with the rest of the group. It's just how it rolls.
Yeah, and it's interesting
like the
because
call, Tyler.
Yeah, thank you. It's interesting because a lot of these like gambling stocks that trend really well in April actually aren't doing that great on a relative basis right now. So it's going to be really interesting to see like mentioning these stocks and then seeing how they perform in April. Just because like they are among like middle of the pack to lower of the pack. So yeah, good stuff, guys. Appreciate the input on that one. We're going to move on now to, let's see, Caesar Entertainment, which is another gambling stock. And again, I was seeing that before this broke out right here, this was a huge resistance point, tried to break out there, couldn't get past it, tried to break out there, couldn't get past it again. And then it finally broke out. And then this looks like it became like the new resistance because, I mean, beforehand, that was the resistance before down here was. So I think this became the new resistance once it broke out, and it's going to be interesting to see what it does. I mean, it just broke out above, the 20-day EMA today. And I think if it keeps breaking out, it could be really interesting to see what happens if it breaks out above 55. But, $40 presents a pretty safe buying opportunity, I think, for this stock, especially with all the seasonality information behind it. I mean, we look up Caesar on the seasonality report. And this one only has 10 years behind it, but it goes up 88% of the time, which means there's been 1 year that it hasn't gone up in April out of the last 10 years. I think I'm going to take those odds. And when it does go up, it's always a powerhouse. It goes up 16% on average in the month of April. So this is another one of those stocks that's just sitting right in the middle of this like channel right here. And it's going to be really interesting to see what happens. And again, with the PPO kind of, peaked a kind of short-term low here. I mean, not a low by any means, but we kind of see the PPO kind of crossing again around that point. So it's going to be really interesting to see what happens with Caesar. I think that's another kind of stock like this.
So I do notice too, you got that arrow, that final arrow over in the right about a week ago.
Yeah.
You can see a higher low there from the last time it put its low in and held that line.
Mm-hmm.
And then, so certainly if it can clear you maybe $55 or so, you can see that clear resistance up top. That's like,
you got like 9 candles finishing at 55 up there. I mean, for the day. So
you can look at that. You could actually look at that two ways, right? Depending upon the way that you like to trade. When you get up to that 55 level or so, that's been like, brick wall. It's moved up from what, 42 or so. That'd be a pretty big move. You got two possibilities there. One is to see if it breaks out and you ride it. The other is to short it.
Yep.
And again, if it's up against resistance again at that point in time, things may be starting to weaken a little bit. You have to know what you're doing. But it's going to be an area where there's going to be a tremendous battle going on. If it clears that level, it could really make a nice move. If it sticks there and doesn't make any other move, you might see some more downside to it.
Yeah, and I mean, talk about a battle. We look at accumulation distribution right here. It's trending so much higher over the past like 2 months, but what's happening when you look at that is it's probably gapping down, and then like it's roaring back during the day. So all these little candles here, I mean, you're seeing gap downs, and then you're just seeing it roaring back to like this 55 area. So like you said, I mean, that could be a very, very crucial spot to short the stock. I mean, if it hits 55, looks like it just bounces down, gaps down, gaps down, gaps down. That could be crucial.
And you put
like an overnight profit if it ever hits up at that area again. So,
and my experience has been, when you get to critical support and resistance levels, that you keep very tight stops. So the closer you get to a very key technical or price support level to the upside or downside, that gives you the ability to keep a really tight stop so you don't get, creamed if it goes against you.
Yeah. Yep. But from a relative perspective, I mean, Caesar isn't doing anything phenomenal. I mean, it's lower of the pack when it comes to gambling stocks. But obviously, it's in a decent industry group right now that could really, take off during this month. So that's Caesar. And then I have, sorry, Matt.
I was going to ask you something. Could you go back to the seasonality page?
Of course.
Have you run any like Caesar compared to S&P 500, like SPX, $SPX? Yeah, I think that it's pretty cool to actually compare to a major indice with this tool as well, because you can see how a particular security has performed against the S&P. Has it outperformed in this month over the past 10 years for Caesar in this example? I think it's a great tool to have as well. I'm all about relative strength.
Yeah,
if it's outperforming the SPY, then that's, I don't know, just something I like.
Yeah, I mean, the SPY is like the ultimate benchmark too. So if you can beat the most secure and largest growing ETF, in the world, then I think you're doing a pretty good job. Yeah.
Yep.
All right. Well, any more questions before I move on to the last stock, guys? Any more comments?
I'm good.
Cool. Okay. So last stock I got is actually Las Vegas Sands, LVS. And over the past 20 years, it only goes up 44% of the time, but it's pretty strong. When it does go up, it goes up 8%. And I mean, if we compare this to the SPY, like Matt was saying, it goes up 8.1%.
Does it automatically? I think it was already filtered.
Oh, was it already doing that? Okay. Yeah, that's why the number was lower. No, it doesn't initially. Initially, it's just by itself. So that's why it was lower than I thought. So that makes sense. Okay. So yeah, I was like, why is it saying that this is 40% now? Yeah, I could have swore that this goes up more often than it goes down. But anyways, so just by itself, I mean, it goes up 56% of the time. So again, you're gambling with another gambling stock. It fits the story. But on those months that it does roar up, it goes up 10%. So it's pretty good return. And out of all the stocks on a seasonality basis that I was looking at, I really like the way that this was looking. I don't even have to, draw trend lines on this one. I mean, this pretty much just is left to right, trending
Beautiful.
pretty great. Could have bought right here, maybe, but yeah,
Mhm.
I would say if we're gonna make trend lines, probably right here would be my bottom trend line, and then obviously up here would be my top trend line for the short term. But I just think with this seasonality information, I think that combined with accumulation distribution and then all the relative strength indicators just topping off, I just think this is a strong stock. I think this is going to be a really good stock, and I wouldn't be concerned about buying this or holding this unless it dropped below like 52.50. What do you guys think about that? Thoughts, concerns?
No, I think, if you take a look at it, okay, the way I would look at this, it looks like 60 is going to be, a area of resistance.
Yeah.
Right up in that, right up, yep, right in the, maybe the 60, 61,
Mm-hmm.
right? And like you said, maybe the downside, if you put a stop in, you've got a few bucks to the downside. So you've got, potentially $5 to $6 up to the upside, maybe a couple to the downside. So I don't really like to get involved in the stock unless it's maybe got a, minimally 2 to 1. That would be, but 3 to 1 or better, 3 to or 1 to better, up to downside risk would, catch my attention.
Definitely. Yeah.
Yeah, and
Any
you know
thoughts,
that
Matt?
this is one of the stocks that I loved for the past year or so. So
Yeah.
this has been one that I held from around 32 to 47 this past year. So this was a great stock for me.
Sweet.
And obviously setting up to make possibly another run. And agreed, it's a 3-for-1 risk to reward. So why not?
Yeah.
Why wouldn't you jump in right here with the
Yeah.
possibility to get to 60?
Especially with this just relative strength here. I mean, this is just an
Beautiful
awesome
strength.
run. Yeah. Just awesome run for you. So anyways, that concludes my seasonality kind of information. It's a little spiel. So I noticed that with seasonality though, one thing that performs really strongly is energy. Energy as a whole and as a sector, it goes up 3.5%, over the course of the month in April. So I kind of Matt said that he was going to talk about kind of rotation and momentum. So I was wondering how energy might be looking, kind of going into April, just kind of given that background. So Matt, please enlighten us. Let's see what you have to say.
Yeah, absolutely. Let's go ahead and do it. I'm gonna go ahead and take the screen from you.
You got it.
Let's go. I believe. Right. So I'm going to be talking about relative rotation graphs, which is a thing developed by Julius de Kempenaar. He's a stock charts guy. He's been stud. He comes on to earnings beats and helps us out with our little big events that we have. What was the one he did this past one? I'm brain farting for some reason.
Market vision.
Market vision. There it is. Jeez. MV 22. And yeah, we had a great showing for that. But yeah, Julius is a friend of Tom's, and he helps us out with a lot of stuff. But so I'm going to start going over some relative rotation graphs with you guys, do a little introduction. It's just like a very visual tool, and this is just the background, going to give you the basics, but I'm not going to read through all that. Let's go ahead and look at it. So you can get there from the members dashboard right down here through the members tools. Oh my goodness. Our RG charts right there. And then I personally like to look through the S&P 500 sector ETFs. So you'll see that'll load up all the sector ETFs for us. And I like to compare it against the S&P. What's really cool about this is you get to track the momentum over the last couple of weeks. So you can see if you zoom out right here, it's just a super visual tool that could be super easy for both new and old traders. Just to give you something, honestly, I don't think there's another tool that's this visual. So as you can see, we have some leadership, we have an improving, we have a weakening, and we have a lagging. So obviously the leading is where you want to be. You want to be leading the sector groups. But obviously if you go back in time, you can see that rotation is what it's all about. You see that getting into one thing at the right time can spur you on to a great move. So we're back about a year right now. So I'm gonna pause it, but you can see over the last couple months, this is 2023, we're going in. So you can see the rotation of the communication turning into leading. You can see technology turning into leading. And honestly, what I'm seeing coming soon is if you just take this to a weekly, or sorry, a daily, and then we're gonna go 3 months just like we just did. I'm seeing some rotation down from XLC and XLK, and we're actually seeing some rotation into XLE, which I think that is going to be a very interesting play within the next week or two. So normally what I do is just jot down the couple sectors that I like. So I got the XLE, XLC, and then XLY. So we will just do a little XLC, see what the industry groups that are leading. And all I do is make this tail go a little farther back, and I'll pick the 2 industry groups that I see that are leading and improving. So we got internet, and then we also got entertainment. And you can do the same thing with the 2 other industry groups that you enjoyed. So we'll do the XLE, bring that back a little bit. You go integrated oil, oil and equipment, pipelines, energy exploration and production. These are all things that I would be okay with going after right now. And then let's see, the last industry we wanted to go after was XLK. And you can see the leaders that we're going after right here: semiconductor software, and then telecom equipment. I'm not as sold on that one. Mostly you see the software and semiconductors. So that's what I'm gonna go after. And basically this is just the base. Do you guys have any questions? Sorry, I was gonna move on.
I was just gonna say that software on a seasonality point is one of the best sectors also in April. It goes up an average off the top of my head. I think it's like 4% or 5%, something like that. So yeah, it's interesting that you're seeing that that's improving into leading also. So a little bit of foreshadowing going on here for the month of April.
It's pretty cool, man.
Yeah.
But yeah, I think that this little circle we're seeing right here is a little disheartening. Just I think that's going to lead in. You see all these defensive areas kind of improving. I just think that, I mean, Tom's obviously seeing something very bullish, and I think that this could just be a short-term blurb of bearishness, but nothing too crazy. I think that there's money to be made, and the stock market's still going up. Just depends on what's going to be pulling it up. So moving on, I'm going to do a little blurb. We have this free newsletter if anyone's interested in joining. Oh, don't look at those. We have a free newsletter. All you have to do is enter a name and an email, and you'll get a Monday, Wednesday, Friday. Normally comes in around 8:30, and it's just a simple chart. I can go through a little example. So I believe this was yesterday's, but you can see that Tom just talked about Caterpillar, did a little price resistance, talked about a positive divergence that popped in. Possible trading candidate, which is just an awesome thing to be having in your inbox 3 days a week for free. What can you say? That's pretty great. And then moving on. So I did
Matt,
I wrote down this.
Matt.
Yeah, what's up?
I want to add one thing. That earnings beat digest, I would tell you that 95% of our members probably come from taking that free newsletter. They get a feel for who we are. It doesn't cost them anything. And then once they, contact us, then they get a 30-day free trial to see us in real action. And, but it really, in most cases, it starts with that earnings beats digest, which is just a phenomenal piece.
Absolutely. Yeah, I forgot to mention the 30-day trial. Thanks for stopping me. But yeah, so you can access 30-day trial, and you can get all this information for free to test it out. So that's a great stop. Thank you, John. But yeah, so I'll actually take us to that. Sorry, maybe we can cut all this out. All right. So if you did want to sign up for your 30-day free trial, you can test this out right here. All it takes is a a name, email, address. You got to enter a credit card information, sign up as an individual trial, and then you can get all this great information we have for the next 30 days and test us out, see if we're the great fit for us or for you that we believe that you are, or that we are. We're gonna try that again.
Yeah, and you're good, man. We can just edit all this out too. So
yeah, we'll just edit this piece out. I'll let you guys do the sales pitch at the end and just put it in there.
All right, all good.
Oh, geez. All right, so then I'm gonna go to the scanning strategy. And this is another thing that I really enjoy to use. As you can see, Tom uses the high volume scan. That's more of a 10 a.m. scan. And then downward trend reversal, which basically just will call out a short-term bottom on a otherwise healthy stock. Great one. The 20-day EMA, which actually I'm going to use today. So all you have to do is click on this and it'll take you into your stock charts account. So I'm going to use our universe. So I'm actually just going to use our strong earnings and strong future earnings and raise guidance chart list. So you go down to chart list right here. You can see this is all the stuff that's downloaded into your account, which you're able to do from our chart list page. Continuing. And then we're going to add the raise guidance as well. And there's kind of a caveat with this. You have to do brackets and an or. If you can see up here, it just says and. So basically that would be saying they will all be on each of these, which they're not going to be. It's set up to where the stronger earnings and strong future earnings won't have any repeats. So that'll pretty much just return you a 0 automatically from this. And then all I would do is those little sectors that I jotted down. So it'd be energy. Oh, group is energy.
Yeah, this is a great idea, actually. I never thought about this, but this is a great way to utilize some of our chart lists into a scan.
Oh, it's so easy. And then same caveat, you have to use the brackets again with the or. I'm just telling you, I love this service because I think it just takes a lot of the guesswork, and these chart lists are vetted by Tom. He does hours and hours of research getting these things ready for our subscribers. So I just think that this should be our bread and butter, and people can utilize this stuff so well. I mean, look at that. I just looked at exactly what I wanted, and I mean, I jotted down a few of them. Telecom, I mean, software was one of them. Let's go ahead and see.
Look at the scooters on all those, man. Like they're all performing well on a stock charts technical rank too. It's pretty great.
Yeah, just I think that there's so many great things we can use, and look, it's all tested in the 20-day setting.
Just look at that yearly chart. I mean, that's just phenomenal.
Phenomenal. I'm just gonna filter through these, and if you guys want to stop in, these are all going to be great stocks. I'm just telling you that they're setting up for. They're all testing the 20-day, setting up for a possible channel. I just think that it's incredible the information that Tom puts in our hands.
Yeah.
And earnings beats puts in our hands.
Yeah. Well, again, this comes from years and years and years and years, of. I'm telling you, I know everybody out there. I follow the analysts and who makes calls and the technical people, and good luck finding somebody better than Tom, and he's on our team.
We got him on our team. I don't know if I like that one.
Yeah, that one was a little bit weird too. Looks like GameStop back 2 years ago.
Yeah, GameStop right there, right? A little short squeeze action. But yeah, I mean, just in general, I mean, this returned 11 great stocks, or maybe 10 or 9.
Maybe 5.
Either way, this is yeah, maybe 5. But either way, filter through them.
Yeah.
I still think it's a great tool. And I think that just even it just centralizes where you're looking too, because I feel like that's what a lot of people get turned around on. They waste a lot of time just because there's so much information to filter through that if you simplify it and have your scans that you like, that you can save a lot of time and effort and get exactly what you're looking for.
You remember we had the we did, we're going to do another one, I'm sure at some point, but we did a live trading chat room. It was an all-day Friday session and people absolutely loved it. And during the session, one of the stocks that came up was Beyond Meat because it was on our short squeeze chart list. You pull up Beyond Meat, BYND.
Can't spell.
We'll be able to
New computer.
What's that? Yeah.
Okay, so I can't spell.
Yeah. But you can see back in late February there, where you got the big spike up to 22. Yeah, that literally was the day that we were in the webinar, and I picked up some of that. And
Nice.
it went up. I forget exactly, what percent it went up, but a lot. And I got out of it. It came back and settled down, but it came specifically from our short squeeze chart list, which we put out and Tom will label and say, if we can clear this level, the short covering could be phenomenal. There's been some tremendous stocks that have popped from our short squeeze chart list.
I remember Vuzi back in the day, man. That was like a $4 stock and it was on our short squeeze list and it went up to like 20, $25, I think. I mean, 500% return. That can't get much better than that, especially if you're an options trader. I mean, that 500% turns into 5,000%. So
listen,
it's interesting.
Yeah,
listen to this.
I have a little bit of a horror story with the short squeeze, but
yeah,
it's okay.
Listen, James, when we first created this chart list, one of the stocks that was on the list before it exploded was GameStop. It was on our short squeeze chart list before it made that historic move that it made.
Yeah.
And I think I'm trying to remember. I think I bought some like at $6 and I said, I think I took a 10-cent loss and got out. And then what it go to?
So yours is worse than mine.
Yeah.
Yeah, I did the same. I think I bought GameStop at 6 and I watched it go from 6 to like 17. I was like, I'll just sell half now. And then like the next day it was at 35 and I was like, I'll just sell it all now. And then the next day it was 160. I was like, I hate myself.
Yeah, but I sold for a loss.
I know. I said yours is a little worse than mine. At least made some profit.
Yeah. Man, right. I remember that though. I remember when it was at its like peak. It was like $400 or $450. And I had a buy order for put options for like a strike price of like 400, like 25 or something like that. And they were dirt cheap. They were the most cheap options like out there. And I was like shaking, like my hand was like this about to like place the order on my phone. And I couldn't bring myself to it. I was like, I'm going to lose all my money trying to do something.
Well, that's what happens. I'll tell you, catch one of these shorts. If you try to short a short squeeze and it goes against you, you're going to be trembling.
Yeah, exactly. Well, gentlemen, we're actually running out of time here. Want to cut this short, but thanks for joining. This was a lot of fun and appreciate, getting the session together and, kind of sharing some thoughts. So yeah, thanks again.
That's exciting. Thanks for having me, as your inaugural show here. I know you guys are going to be, getting together and huddling and talking about doing some, other shows. Maybe at some point get Tom in for a little clip. That'd be kind of cool to have Tom come in and then. But I'm looking forward. And again, you got to start somewhere. And if you're a young person or you're at a point, you got a little bit of money and you want to try to do something, it's hard navigating out there. People who think, that the market's not friendly. The market wants your money. The market wants to take every penny you have. So if you are looking, for some unbiased guidance, I do want to say one thing. I should have said this at the beginning. We're not investment advisors. We're not registered investment advisors. We're educational in everything we do. We lay things out. It's totally up to anybody who listens to us, do what they want to do. We can't, recommend anything or don't recommend anything to anybody, but you got to start somewhere. And really, I think that Earnings Beats Digest, if you're just either getting into, might take you a number of years before you can even get going, but you got to start somewhere. And I think, for us to be reaching out to all different generations is something we'll be able to help a lot of people.
Definitely. Yeah, I agree with that. And, I was always, being that my dad is a very good stock trader, I always tried to do my own thing and try to learn things my own way. And I've lost a lot of money over the past couple years that I've been trading. And the moment that I kind of sucked up my pride and started listening to my dad and like learning his education, I started becoming a more profitable trader. So
that must have been tough.
Hearing that from his son, I guess it can be like a double-edged sword going both ways, right? I could just be pitching for him because I'm his son, but I don't want to give him props because I'm his son. So yeah, but no, he does a great job and I've learned so much from him. Matt, any finishing comments?
No, just I'm very happy to finally get this ball rolling, and I thought that was some great information that we shared. I think the seasonality, RRG, and really getting a base of who we are at earnings beats. That's all this is about, man. Learning and educating. That's what we like to do here.
Definitely. And yeah, it was interesting seeing how like the seasonality information kind of tied in with relative rotation. I mean, we're seeing like software and like energy going towards momentum, and like that's a very, very strong industry groups in April. So it's gonna be interesting to see how that plays out. But yeah, let's wrap this up. Thanks for joining, everyone, and we'll see you next time. Thank you so much.
So long.